Hey there, my name is Parul, and in today's video we will be talking about current economic news, which is another interest rate hike. So the Federal Reserve, which is the central bank of the United States, has raised its key interest rate for the 10th time in the last 14 months. This means that it will now be even more expensive to borrow money for things like buying a home or growing a business. I will talk about how federal funds rate affect economy at the end of this video. So please watch the entire video to understand this tool completely. I do have a slight cold, so please bear with me as my voice is a little bit husky. Anyway, coming back to today's news, the federal funds rate used to be really low, almost zero, after the pandemic hit us in 2020. The rate was kept so low so that the economy could get a boost by increasing spending, both by general people like you and me and through business expansion. But now this rate has increased and it's between 5% to 5.25%, and it has been the largest in many years. So this change may slow down the economy because it will be harder for people and businesses to borrow money. In the press release, the Fed's chair, Jerome Powell, said that they may not be raising the interest rate anymore for now, but will keep an eye on the economic data to see what needs to be done. As you may have heard in the news, that this increase in interest rates for quite some time has been causing a lot of problem in housing market, and it has also caused some bank failures. But the Fed had to do it to control inflation. Next, I will be talking about how the federal funds rate affect the US economy. So let's start by understanding what this rate really means. Simply put, it is the interest rate that the banks charge each other on overnight loans. The federal funds rate affects the economy in several ways. The first one is through increased borrowing cost. So when interest rate go up, it becomes more expensive to borrow money. For example, if you have a credit card with an adjustable interest rate, your interest rate and the minimum payment will increase when the federal funds rate go up. Similarly, if you are looking to take out a mortgage or a business loan, you will face higher borrowing cost, which can reduce demand for these types of loans. Second way it affects the US economy is through increased savings rate. So when interest rate rise, it becomes more attractive to save money because you can earn a higher rate on your saving. For example, if you have a savings account or a certificate of deposit, CD, you may earn a higher interest rate on your saving when the federal funds rate go up. As a result, you may be more inclined to save money instead of spending it, which can overall slow down the economic activity. Related to these two, the third impact of this is that it tends to decrease inflation. So one of the goals of the Federal Reserve is to keep inflation under control. When interest rate rise, it can help to reduce inflation by reducing the amount of money available in the economy. For example, if interest rate goes up, it becomes more expensive for businesses to borrow money to invest in new projects. This can slow down economic activity and reduce the demand for goods and services, which can ultimately control inflation. Lastly, it tends to increase the value of the US dollar. When interest rate rises, it can make the US dollar more attractive to foreign investors. For example, if the federal funds rate goes up, investors may be more likely to invest in US bonds and other financial instruments, which can increase the value of the US dollar. It also affects the US imports and US exports. This can make the imported goods cheaper, but it can also make US exports more expensive, which can reduce the demand for those. So overall, a rise in the federal funds rate can have both positive and negative effects on the US economy, depending on the specific circumstance. So it is one of the most important tools that the Federal Reserve has for controlling the US economy and maintaining price stability. I hope you found today's information useful. If you like my content, please subscribe to my channel. I have a master's degree in economics, and I tend to make videos on current economic events and personal finance topics so that anyone can understand. Thank you so much for watching, and I'll see you soon in my next video. Bye.